Hello, my name is Mike Florin, and I'm with Low Cost Mortgage. Today's your weekly update for the first week of November 2023. All right, rates are coming down. Remember the other week when I brought up that October tends to see the higher rates for the season, and November, December, sometimes January tends to be lower? For the last 5 years have shown that. Well, this year's no exception. The Fed did not increase interest rates, and other data aligned in a good way, and that brought rates down. In fact, they've come down more this week than they have in any one period of time in a very long time. So what does that mean? Realtors, if you have buyers that are on the fence and kind of backed out because of rate, time to go reapproach them, right? Hey, rates are now right here or wherever they are, right? Today they're mid sixes on Govy, par, starting to get in the low sixes with a little bit of money. In some scenarios, we saw a scenario pop up low sixes par today. And then conventional is high sixes, low sevens, par, a little bit of discount money, definitely in the sixes. It just kind of depends. But with that being said, the buyers that were government and saw rates start to go in the sevens, when it's back down into the mid to low sixes, they're probably going to come back around and say, okay, I can emotionally deal with that lower rate, therefore let's go shopping. Here's going to be your negative with that. The good thing is go out there and grab them, go out there and try to make those sales, but the bad thing is there's a lot of other realtors going to do the same thing. So now those buyers, there's a possibility that those buyers are now going to throw in multiple offers on the same home. So speed's probably going to be key there. Now let's talk about shopping rates and making sure you're getting the good deal, okay? When rates come down, I'm going to show you a chart of this week, and rates come down a little bit Monday, Tuesday. Well, we had a borrower on Monday, Tuesday say, hey, we're going to use this other lender because this other lender has a better deal. And my reaction was, wait, hold on. No. Day by day, we're going to have the better deal. Well, they were using our rate from a week and a half prior compared to the other lender's rate that day. When I finally got them to send me the loan estimate from the other lender, we were 0.5% lower. So what does that mean for you and your borrowers? When there's big movements in rate like there is now, us on the mortgage brokering side, on the lending side, what we're going to end up doing is there's a few tools we have, right? One is you don't lock when rates are high with lenders that don't float down. So float down is always a key critical tool, right? Rates come down a lot, you float down. Sometimes floating down doesn't work and we have to take the loan and we flip it to another investor. But most importantly, it takes a few days for those rates to level out, especially with companies like us where we focus on the lower rates, but we have to have a little bit of conservatism inside of pricing. We've got to make sure that our rates are low and sustainable, which means when rates come down, it takes us an extra day to actually figure out where our rates are. And most of our investors are the same way. You'll see the 10-year treasury come down and a bunch of investors will come down. Let's just say these are the low investors, these are the higher priced ones. So typically it looks like this. And rates come down, well, the lower priced ones are really hesitant to move. The expensive ones move right away because they have a lot more margin and it takes time, and then the cheaper ones will always settle out lower than the more expensive ones. And that's kind of the easiest way to describe it. So if you're a borrower and you are working with a lender, and that lender, you get approached by maybe somebody else and that other lender says, hey, we got a better deal, reach back out to that first lender with a copy of that loan estimate from lender number 2 and say, hey, this is a loan estimate I got from lender number 1. What do you have? 9 out of 10 times, if that lender 1 beat lender 2 before, they're going to beat them now. But there's timing involved. So for example, let me pop that chart back up. If somebody, any lender, including us, if we quote you a rate when rates are high, and then now rates are low, and you haven't talked back to that lender who was beating everybody at that time, well, guess what? Rates are now lower. So if you talk to them here, they're most likely going to beat everybody again. So anyways, in summary, rates are low. Realtors, go out and grab your buyers that backed out because rates were high. Try to capture that. We don't know how long it's going to last for. The data shows 2 or 3 months, but you never know. We are expecting a rebound of rates, so rates to come back up at some point in time where they just kind of bounce a little bit and then maybe settle out. So expect that to possibly happen. Borrowers, if you're dealing with a lender and you contact lender number 2, and a lot of times we are lender number 2, and you have lender number 1 and lender number 2, one was a certain way and two is cheaper, but it's been a few weeks or a few days since you looked at number one, compare them on the same day. More importantly, compare them within the same hour of each other. You might be surprised as to which one is actually the better deal. Anyways, this is Mike Florin with Low Cost Mortgage. Have a great day. Talk to you later. Bye.